Hi, this is Ashwin with over 13 years of experience in catastrophe modeling, insurance, and reinsurance analytics. So, yesterday we have discussed profit and loss statement, which is part of financial statements. So, today we will discuss balance sheet, which is one of the statements in financial statements of organization. So, as part of contents, we will discuss relationship between various capitals. What are the components of balance sheet? That is assets, liabilities, and shareholders' equity, and their calculations. And towards the end, we will discuss balance sheet of an organization as an example. So, let's get the video started. So, what is the relationship between various capital? So, we have authorized, issued, subscribed, and paid up capital as various types of capital. So as you can notice from the chart, authorized capital sits on top and it is a maximum capital that can be raised from public. So in our example, let's say 100 crores is the authorized capital. So now what is issued capital? So issued capital is one that a company can raise to generate capital from shareholders. But ideally, it will always be less than authorized capital since some part of it, that is unissued capital, will be preserved for later use as part of funding. So, what is subscribed capital? So, once company issues shares, not necessary that all issued shares will be subscribed by investors. So, in our example, 70 crores out of 75 crores has been subscribed. So, it means that 5 crores has been unsubscribed. So, usually, whenever a good governance company goes public, we always see oversubscription of the shares. So in that aspect, it means that the subscribed capital is 100% of issued capital. But in our case, uh, there is some part of unsubscribed portion. So what is paid up capital? Suppose a few subscribers fail to pay the last installments. So in such cases, paid up capital will be less than subscribed capital. So in our example, only 65 crores is the paid up capital out of total subscription of 70 crores. So usually, if it is 100% paid up capital, it will be equivalent to subscribed capital or the issued capital. Now that we know the various types of capital, let's understand balance sheet. So balance sheet is a financial statement with three main ingredients: assets, liabilities, and shareholders' equity. So it records what an organization owns, which is called asset, what it owes, it is called liability, and its shareholders component. So what the owners own. So only publicly trading companies are required to showcase balance sheets in their annual reports and quarterly reports. Otherwise, non-listed companies, it's not mandatory that they have to showcase balance sheets. So, what is the equation of the balance sheet? Assets should be equivalent to liabilities plus shareholders' equity. In other words, shareholders' equity or owners' equity will be extracted from assets separated by liabilities. So balance sheet is a snapshot of business at a single point in time. So as on year ending December 31st or probably quarter ending June 30th. That is how balance sheet is known for. It's always a single point in time financial statement. So moving on to the individual ingredients now. So we have discussed that assets are something that company owns. So as you can notice, there are two types of assets. They can be classified into two types. One is current assets and other is non-current assets. So if you look at current assets, so the current assets are something that are for a short period of time. So probably within less than 1 year. So anything which is receivable within 1 year are part of current assets. So you can see that cash, account receivables, so the amounts that are typically owed by customers, and then we have inventory. So they are the goods or the raw materials that are within the organization. And you can also notice prepaid expenses. So when you say the word as prepaid expenses, so how come it is part of current assets? So so if you notice, we have insurance premium here notified. So let's say insurance premium that this company pays is about 120K for the upcoming 12 months. So it is the expense paid in advance but not yet incurred. So what does it mean? So each month expense of about 10K, because like the premium is 120K. So each month 10K will be deducted and will be part of monthly income statement expense. And by the 12 month, entire 120K will be fully expensed, and the prepaid expenses will be seen as zero by the year end. So that is how prepaid expenses will always be part of current assets, and by year end, the prepaid expenses will become zero. So moving on to non-current assets. So non-current assets are any receivables that go beyond 1 year, that are long term. So as you can notice, fixed assets like land, buildings, machinery, and equipment are always for long term, and along with long term contracts wherein customers owe you the amounts only in the very long term, meaning more than 1 or 2 years. Yeah, again, the receivables are more than 12 months or longer. And then intangibles. So intangibles such as patents, trademarks, licenses, etc., will always be part of non-current assets. So what will be our total assets? Total assets will always be current assets and with addition of non-current assets. Let's move on to liabilities now. So liabilities is something that company owes. So again, this is classified into current liabilities and long-term liabilities. So again, current liabilities is something which a company owes within 1 year, while long-term liabilities are that a company owes with time frame greater than 1 year. So, like as you can notice, for current liabilities, we have short-term debts, accounts payable, accrued expenses, and current portions of long-term debt. So, all these kind of payments that a company is obligated to pay are part of current liabilities. And with respect to long-term liabilities, so bank loans, obviously, bank loans are always for are always for greater time frame. Again, we have this leases, notes. So anything that is part of long-term time frame is part of long-term liability. So when you combine both current liabilities and long-term liabilities, it forms total liabilities. So now that we have understood assets and liabilities, let's understand the last ingredient, which is shareholders' equity. So assets subtracted by liability will give us owner's equity or shareholders' equity. So there will be various components as part of shareholders' equity, such as you can notice, common stocks, preferred stocks, treasury stocks, additional paid-in capital, retained earnings, AOCI. So all these components combinedly form total shareholders' equity. Let's understand each of these components in greater detail. So what is common stock? So common stock is a basic form of shareholding representing the ownership. So shares issued and that are available as part of the market are nothing but common stocks. And what are preferred stocks? So preferred stocks have a greater claim on companies' earnings and assets than common shareholders do. So they'll be eligible for dividend distributions before common investors, but they have no voting privileges. The common stockholders have voting privileges. And what is treasury stock? Treasury stock is the value of shares that are purchased or repurchased by the organization. So, since it is always involved with purchase or repurchase, they are always shown as negative as part of shareholders' equity. Because when a company purchases from the market, there will be outgo, right? So, that's the reason why it will be seen as negative. And what is additional paid in capital? So every company has a par value or face value. So the par value of the stock is recorded as common stock, and the difference between market value and par value, it is called as additional paid in capital. So let's say market value of the stock is 50 rupees, and face value of that stock is 10 rupees. So the 10 rupees multiplied by the outstanding shares will be part of common stock, and the 40 rupees will be multiplied with outstanding shares, and that will be part of additional paid in capital. And what is retained earnings? So this also completes the balance sheet PPT tutorial. So if at all you have any questions or would like to share any feedback, please do so.